Everyone is obsessed with gold. In 2025 it hit record highs. Everyone is obsessed with Bitcoin. But while the world was looking at digital coins and shiny bars, a dull gray metal quietly became the best performing asset on the London Metal Exchange. It's not lithium, it's not copper, it's tin. As of December 2025, tin prices have exploded past $40,000 per metric ton. Why? Because without this boring metal, the AI revolution stops dead in its tracks. Today we're going inside the tin squeeze to show you why the smartest money in the world is betting on the one mineral no one is talking about, and how you can spot the hidden value in the earth. Think about the biggest AI companies: Nvidia, AMD, Microsoft. They all rely on high-end GPUs, but here's the geological truth. You can't build a chip without solder. Tin is the glue of the digital age. It's the primary component in the solder that connects every single transistor on a circuit board. Here's where the finance gets interesting. A standard laptop uses a tiny amount of tin, but an AI server, the kind found in massive data centers, requires up to 3 times more tin-based solder than traditional equipment. We are in the middle of a technology supercycle. Every time Nvidia ships a new H100 or Blackwell chip, they are effectively locking in future demand for tin. If demand is skyrocketing, why can't we just mine more? This is the geological bottleneck. Most of the world's tin comes from just a few places, and in 2025, they are all in trouble.
The world's second largest producer just finished a massive crackdown on illegal mining. In October 2025 alone, exports collapsed to their lowest levels in years. While they are recovering, the easy tin is gone.
Mining was suspended for over a year. Even though it's restarting in late 2025, liquidity is thin. The grades are dropping.
The BC mine, the third largest in the world, faced a temporary shutdown this year due to regional instability. That one mine represents 6% of the global supply.
When you have a supply deficit and demand that is price insensitive, meaning AI companies will buy the tin no matter the cost, prices only have one way to go: up. So, how do you play this? Most people can't buy a metric ton of tin and put it in their garage, but investors are looking at 2 areas: direct exposure, following the LME tin contracts, which have outpaced copper by nearly 10% this year. Junior miners, small exploration companies in stable regions like Australia and Canada, are now strategic assets. But remember, geology is a long game. It takes 10 years to start a new mine. The squeeze we are seeing today is the result of a decade of underinvestment. In 2025, the chickens have come home to roost. The lesson of the tin explosion is simple: value isn't always shiny. Sometimes the most important asset in your portfolio is the one that makes everything else work. If you want to stay ahead of these trends, you need to look where geology meets the bottom line. I've put together a 2026 critical minerals watch list that covers tin, copper, and 2 rare earths you've never heard of. It's a simple Excel tool to help you track these prices yourself. Check the link in the description to grab it. Don't get distracted, buy the gold. Watch the solder. I'll see you in the next one.